Right then, good afternoon folks, and just another update from us at the end of another week of trading. I will jump across the calendar. We'll have a quick look across the calendar on a relatively quiet week on the data front. Have a quick look at next week as well before we wrap this up. But you can see, take us back to Tuesday. No high impact data on Monday. Take us back to Tuesday. See some negative figures out of Australia and also out of China, which put a bit of a dampener on sentiment earlier on in the week. Didn't really result in too much of a move to the downside, so kind of can skip past that and move on from that. The unemployment rate, 7 o'clock Tuesday morning out of the UK, unemployment slightly above consensus, an uptick in terms of the unemployment rate throughout the United Kingdom over the month of March, which has put a slight dent in sterling's rally. Has coincided with a bit of dollar strength, so that was really to be expected. But cable has pulled back from the highs, which we will have a look at now in a minute. With some retail sales, consumer spending figures still relatively okay below consensus, which isn't ideal, but still consumers still reaching into their pockets and spending money. Apart from that, really out anywhere really actual. You can see high inflation when it comes to Japan. Consensus of 2.5, actual of 3.5, which is relatively low comparing to the rest of the world. And Japan have had no inflation or very little inflation for a long time, so I don't think it'll be too unwelcome a slight bit of inflation in Japan. That brings us across to the charts. The information. The positive news over the course of this week is Joe Biden talking up a couple of things, speaking about raising the debt ceiling, about coming to an agreement, and that they are committed to reaching an agreement to raise the debt ceiling, which will alleviate some pressure on markets and regional banks. There's been a bit of alleviation of fears around the regional banks. There's been some hawkish Fed speak over the course of this week, talking up interest rate hikes for the June meeting, which has proved supportive for the dollar. You can see the S&P 500 also grinding higher along with yields. So the dollar and yields pushing higher is to be expected off the back of hawkish Fed speak. I think maybe you couple that with some US dollar with some stock index strength. Normally you would see the currency in the stock index move inversely if it's off the back of some sort of monetary policy move, but this would say to me that this is a move driven by the potential raising of the debt ceiling. So pretty positive week across all the US related assets. You come across to the DAX, and the DAX has reached fresh all-time highs as of this morning off the back of strong corporate earnings throughout the economy. So couple that with the raising of the debt ceiling, it's driven the DAX to all-time highs, broke out of its recent range, which has been a nightmare to trade for about a month. The S&P 500 has been a nightmare for a month. Dollar's been a nightmare for a month. Yields have chopped sideways for a month, but now the back end of this week, over the course of today and yesterday, we have broken out of these recent ranges, and let's hope for that to continue. Be interesting to see where we close at in terms of the DAX. Come across here, the actual all-time high, certainly on this chart, is there, as you can see. So we are slightly above it now, still trading very close to the highs of the day. I think a close above that level will certainly be interesting. Any sort of a failure wouldn't cause me to rethink. Obviously you've got this big uptrend, still favour being a buyer, but it certainly would be interesting if you cannot close at an all-time high for the week. Apart from that, that is really what we are looking at in terms of markets over the course of this week. Not a great deal of information out, or fresh information, other than potential for raising of the debt ceiling has driven markets slightly higher. Not slightly higher, pretty aggressively higher. But you can see the currency, the US dollar, S&P 500 and the 10-year yield all pushing higher together, which is not something that you see too often. That is what we have seen this week. So let's hope that continues. Let's hope that these trends can continue and keep pushing higher. Maybe you look to get into some sort of a retest of these levels. We're looking at a trade on the dollar a couple of weeks ago, hoping for a breakdown through 101. And did say if things turn around, if yields start to push higher, this level fails to break, and we do push up through these highs, that would be the cause to rethink. That did happen on Friday of last week, and a nice little retest in here, as you can see, on Tuesday of this week, and then continued on higher up towards 104. These 10-year yields broken out of this range as well, never got through that support level that we were looking at, back up through these highs. Certainly a bit of positivity surrounding each of them A couple of retests, maybe a retest of this range on DAX, probably where I'll be looking heading into next week. But speaking about next week, we'll come back to the calendar, have a quick look at the calendar for next week. We got some CPI out of the UK. Now we did have, we are still at double digits as of last month's figure when it comes to CPI. Consensus this month is for 8.3. That we're going to print double digits again this month, but a 2% drop in the rate of inflation, or a 1.8% drop in the rate of inflation, would be a welcome development within the UK. But nothing out Monday, Tuesday, CPI on Wednesday. You got the minutes out of Fed. I'll have to see how they felt about rate hikes or future rate hikes at the last meeting, but hawkish Fed speak this week talking up the prospect of rate hikes in June would suggest to me that we will get one, which was it last week or the week before that we were saying that I think they will have to raise interest rates. Data does not suggest that stopping interest rate hikes just yet is the best of ideas. Do have some inflation next week, 130 on Friday of next week out of US core PCE, which is the Fed's preferred metric of inflation. Consensus is 0.3. Do we come up above that, or do we come in below that? Inflation has remained sticky across the globe, not coming down in the way central banks would want or hope. We will obviously cross that bridge when it comes to it next week. But that's it from me then, folks. I'm going to wrap it up there. Let you get on with your weekend. Do recharge the batteries, switch off for a day or two, and we'll be back next week for another week of trading. Thank you.